Then we send troops down
to Saudi Arabia.
Yeah, we send troops down to Saudi Arabia. Why? Because of oil. Yeah. Basically, they don't care about people. They just care about the oil at the end of the day.
Shout out to Lockheed.
Shout out to Lockheed Martin.
And Raytheon. No, they gonna make some money.
They gonna make some money. Oh, so that might be something you want to look into is Lockheed Martin.
That's crazy.
Yeah, I mean it's so sad, but this is how we operate as a country and globally, right?
Yeah. When I come around, got the whole thing wobbing, wobbing, wobbing. When I come around, got the whole thing wobbing.
What's going on, everyone? This is your boy Marcus Demitri.
It's Anonymous J.
Welcome back to Minority Wall Street. Simply put, we're here to increase your investment mindset. We believe that once you have it, you own it. Profits over everything. So in today's video, we're going to recap the last 2 weeks of the market. We missed last week's video. We had some exciting opportunities we had to take advantage of. And then also we're going to talk about the importance of stocks that pays out dividends.
Yes.
So we're gonna share some good news. Somebody gonna share some good news.
I don't want to jump again.
No, but
We'll see.
Yeah, we'll see. But we'll talk about the importance of it. So we're gonna start off with always JJ. He's a day trader. So how was your trade in the last 2 weeks?
So trading the last 2 weeks, okay. So actually, Marcus was proud of me because I did a small trade and I actually made a little bit of money. I wasn't chasing it, and then I got into a trade last week. Didn't like it, got out of it. So my trading week, up and down. I'm just trying to be as patient as possible because in the past I have made some good trades and then have chased money and made some bad trades. So again, as you know by now, I trade Amazon options. Okay, all day, every day. I know I need to diversify your portfolio. Nobody cares about that, man. Actually, you should. But yeah, so I did 2 weeks ago. I made a good trade. I made a profit, and then last week, like I said, I lost like $15, which isn't that bad. So again,
Not bad.
It's not bad at all. So the temperament.
That's like a lunch. That's a lunch.
Yeah, it's a lunch. So I'm just not too confident in the temperament of the market itself because it's like the S&P was about to hit its 52-week all-time high at 30.27. It just didn't hit that market like 30.21. I think that hit its highest and it just pulled back, and now it actually pulled back under the 3,000 mark. And just talking about the S&P itself. So me personally, I feel as though the market will be a little bit more bearish, and there may be some sector rotation that's going on out of this growth, out of the growth stocks as well. So because I'm paying attention to tech, obviously, and that's been the growth for the last 8 to 10 years. So yeah, that's pretty much what my trading has actually been. So
yeah. So with me, just trying to build up that capital, build up that cash. I didn't any trades, but did some studies and paid attention to what was going on in the market. The Fed cut interest rates yet again. 25 basis points? Yeah, 25 basis points. What else happened? Saudi Arabia oil got crushed. That was crazy. What else happened?
No, but 2 weeks ago, it was China and the U.S. are going to meet.
Yeah.
About their talks, and then last week, I think on Thursday or Friday, it's just like, but they kind of pulled back the talks. It's just like, man, just get something done, bro.
To be honest, I don't think that will get done right now. I think because the election that's coming up next year, I don't think that will work out. I think Trump will probably, if a deal was to be made, he would probably do a deal like closer to the election, to where it'll boost people. Like, oh my God, we did this trade thing. We need to re-elect him again because he's the only one that knows about the trade deals, stuff like that. So I think that's what's going to happen. So I think the market is going to be definitely fickle, volatile up until the election. And then, quite honestly, I know we talked about the yield curve being inverted a couple of videos ago, and the importance of that is that your short-term rate is higher than your long-term rates, so that increases the inverted yield curve. So by the Feds cutting the interest rates, they basically take part of the short-term rate. So by cutting the interest rate, they're trying to steepen the yield curve into a positive direction to bring more confidence back into the market for investors, just so they just won't be in less risky assets as bonds. So I think, I see what they're trying to do to steepen, steepen the yield curve, trying to, allow more people to get more loans out to invest in other companies or in their own company, or
Stock buybacks.
That's huge. That's what they're doing all the day. But at the end of the day, I mean, you lowering interest rates to these companies, and they just getting these loans. Eventually, they ain't gonna pay them back.
Yeah, it's crazy.
So that's gonna be crazy. And the banks lending out money at a low interest rate, they're not making no profits from that. And then when the Fed start raising interest rates and those loans getting paid back, okay, well, I'm getting paid back on like a 2% type loan, and now interest rates is like at 3.5.
Yeah.
That doesn't do anything. So I think that's going to be, quote unquote, the bubble is basically credit. There's going to be another credit thing instead of for consumers with back in the day with the housing market. It's going to be with businesses having too much debt on their books, not being able to pay them back, going into default. And when you go into default, you lay off workers. When you lay off workers don't have no money. When you have no money, you don't buy anything.
Trickle down, man.
So it's a trickle down economic effect. So I think that's where we kind of heading to. So that's what I believe. As far as right now, the sentiment is where, as far as being bearish. But overall, I think because of the Fed cutting interest rates and some movements happening, I think it's gonna spark some
last bit buying,
last hurrah until the economy's something, because economically, as far as GDP, GDP, even though it's slow, it's still positive.
Yes.
Employment is no increase in unemployment with that, so that's good. CPI, Consumer Price Index, is not crazily high or anything like that. So for an economic standpoint, we're pretty good, but it's not organically made. It's not. It's the Fed just manipulating the markets, the economy, just by lowering interest rates. I mean, you can't lower it, we go up to zero then negative. You can't do that. So, long story short, right now I'm slightly bullish in the market. Right now.
Okay.
When I mean right now, I mean from today as we record this video until the end of this year.
Okay.
I think we're gonna finish the year off strong.
Okay.
And and like around springtime of 2020, that's when we'll start seeing a lot of stuff going haywire.
Okay.
Let's have an election year.
Mm-hmm.
We still don't know. I don't think there's no trade deal close, because again we have holidays coming up for the U.S. A lot of government officials gonna be out of the office. It's the nature, and people, and plus in the fourth quarter, people it's holiday season. They don't really do anything.
Yeah, but let me ask you this. Okay, so do you feel as though the S&P will hit a new 52-week high?
No, it's gonna hit this high.
It's gonna hit a new 52-week high.
It's gonna hit a new 52-week high.
I don't believe it.
It's gonna hit a new 52-week high by the end of this year.
Okay.
But once it hit a new 52-week high, it's not gonna go past that until years from now. That will be the last 52-week high that the S&P 500 is gonna have for quite a while.
Okay. Yeah,
and that's deep.
Yeah, I mean, but we definitely gonna have to chart it and see what type of patterns we're actually seeing. So.
Yeah, but I'm talking about like from a fundamental standpoint.
Gotcha.
And typically companies are doing a lot of hiring. As far as if they're going to hire, this is the time that they do hire, because they want to bring in the new employees before the end of the year for training purposes and just to get them to get it on their books and stuff like that. So Yeah, so this is what's really going on with the economy. So, with all that being said, next week we got the Fed cut interest rates, right?
No, last week. That's what occurred last week.
Yeah, last week.
Okay.
The Fed cut interest rates last week. Well, we're recording for this week. So, but when they see it, it's gonna be last week. So yeah, so last week the Fed cut interest rates. What else? And there's no new talks regarding a trade deal with China and the U.S. I think the oil issue that happened last week was kind of subdued a little bit, but I think gonna revamp up with supply shocks, things of that nature. I know. Didn't we send troops down?
To Saudi Arabia.
Yeah, we sent troops down to Saudi Arabia. Why? Because of oil. Basically, they don't care about people. They just care about the oil at the end of the day.
Shout out to Lockheed.
Shout out to Lockheed Martin.
And Raytheon. No, they gonna make some money.
They gonna make some money. Oh, so that might be something you want to look into is Lockheed Martin.
That's crazy.
Yeah, I mean it's so sad, but this is how we operate as a country and globally, right?
Yeah.
So
yeah, those two companies look into it, and they may pay dividends, right?
yeah, they may pay dividends. Oh, speaking of dividends, well, no, before we go into dividends. So next week, so I won't get off track. So next week, I believe the market is going to be bullish, and it's going to be bullish about 23 points.
Okay. No, the S&P will be down. There's too much stuff going on.
It's going to be bullish. It's going to be bullish. The reason why, because the Fed, people kind of digested that information, even though it's already priced into the market. People digested the information. They kind of know. Well, yeah, you got the truth going to Saudi Arabia.
So what you doing? What you doing? Because I've been bearish the last 4 weeks. I'm bearish. I'm looking for the S&P to chart like be in a range. You know what I mean? So I'm looking for it to establish a
I'm gonna
range.
go bullish. I think it'll be bearish around October. So,
okay, but that's a lot of earnings and things of that nature. So it may pop at that particular moment.
Yeah,
For
I mean, with tech and stuff like that, that's why I'm saying gonna create this new 52-week high by the end of this year. I'm gonna go bullish. I'm gonna remain strong in my stance.
Okay.
So I'm gonna go bullish.
Okay, I'm going bearish.
Yes. So I'm going bullish 23 points. We're gonna be up 23 points by the end of Friday of this week.
Yes, and I'm bearish. I'll say about 35 points. I can't remember where the 50-day moving average is, but it's going to be close around that particular point. So I'm bearish.
Yeah.
We'll see what's going to happen.
All right. So you mentioned dividend.
I did. We talking about Lockheed and Raytheon.
So Raytheon, Lockheed, you might want to pay attention and look into those. If you can't afford the stock itself, look into the options. You know, there's nothing wrong looking to the options. But going into dividends, I mean, in this video we wasn't gonna talk about dividends whatsoever. But Anonymous J told me some information about yesterday on the possibility of a dividend payment that he might receive this week.
Yes, so hopefully September 24th I will be receiving a dividend pay with this company that I have. I got a notification actually from E-Trade saying that a dividend should be paid, but I didn't receive an email from the corporation, the company itself. So I checked with them on Friday. Hopefully I'll get a word back Monday and see if that'll actually go through. So I'm anxious, man. I'm definitely anxious to see if I'll get that dividend paid out for that particular company, because it's a small company, man, over-the-counter company. So usually they don't give out dividends, but hey, we'll see.
Have they give out dividends before?
2011 was the last time it actually did. So
you know, people will say, "Okay, you lying," because it's like, what company?
I don't want to disclose all that.
Okay.
Time I will do so. I'll do so in another video, man.
Yeah,
Actually, in the next video, I'll disclose that, because again, it may come to fruition, it may not. But I mean, I was excited, and I gave him. I was like, man, it may be something that's actually going on. So, with that being said, we just started talking about dividends, and we went over the dividend yields and all the stuff like that. So, there are corporations and companies that actually have been doing pretty well with increasing their yield and increasing their dividend pay. And one company that he looked at, what was it, yesterday or the day before?
It was yesterday.
It was yesterday, yeah, UPS, man. So talk about that UPS, man.
Yeah, so UPS been pretty crazy. I mean, I think in 2000, I look back 2014, and their dividend at that time was about 45 cents. And today, as of today, they pay out dividends at 91 cents. So that's pretty big. Just imagine if you had like 10,000 shares of UPS, and each quarter you receive 91 cents per share, right? How much is that? Like $9,100. $9,100. You know, every quarter. So just imagine if you was just a full-time worker. If you work full-time at a job, you do pretty well. You get your bonuses here and there. You get overtime if you do the work over 40 hours in some companies. And then you have the luxury to have $9,100 just deposited into your account every quarter.
Yes.
For a whole year.
Yeah, but the thing is, you can either get it reinvested,
Yeah, you can.
It back into the stock, or you actually get the cash payout. So, me personally, if I'm at that particular point when I'm getting $9,100 every quarter, I'm taking the cash payout. I'll buy some more stock if necessary, and then utilize the cash for things.
Yeah, it's not tricky, but it's tricky when you get those dividend payments. It's okay, do I take the cash or do I reinvest it into the company?
Well, you have to pay taxes on that too.
Yeah, you do have to pay
capital gains tax. So I always remember that.
Yeah, so I mean that's a trick question. I think it depends on your what they call. I'm sorry, using technical terms to help out. Investment horizon, right? That's what they say. Your time horizon. How long do you want to hold that particular stock, or how long are you, as far as time-wise, as an investor? So if you're a long-term investor, you might want to keep on reinvesting back into the company if you feel that the company is stable. If you feel that the company will continue, well, you won't know if they continue to pay dividends, but you just want to look at the stability of that company. Will it be around 5 to 10 years from now, right? So if you feel like this company will be here quite a long time and you're not in need of any cash or anything like that, then yeah, reinvest it back into the stock to buy more shares to amp up your dividend payment each quarter, and then the price appreciation per share for that particular stock. So or if you want to say, hey, I want to quit my job. No. I'm saying if I want to quit my job to start my own business, those quarterly dividend payments can be your loan to yourself to start your own business with, and you don't have to go to a bank, right? You can start your own business, or you can reinvest it into a startup firm, just like a Uber or a Lyft before they go IPO, and you can make crazy amount of money if that company does well, of course.
Yes.
But I mean, you just have so many options. But the thing is, the purpose of this video and dividends is that it provides you different sources of income as options. You don't have to rely on 40 hours a week or overtime, or I hope the company pays my bonus give me a bonus. But bearing that the company has to do well. The department has to do well, and you get a percentage of the percentage of the percentage for your trigger down for your bonus. So it provides you different options in regard to that. And so we're looking at dividends and the importance of it. We checked out Coca-Cola as well. That's a stock that routinely been paying out dividends for numbers of years and stuff like that. So yeah, dividend payments is the way to go. Dividends is the way to go. So if you're looking for what they call income and you don't want to go to the bond market, that's a different story. And you still want to stick to equities, find those stocks that pays out dividends. And just look at the history of the dividend payments. Are they increasing? Are they decreasing? And if they're decreasing, find out the reason why, because that may not be a company you want to invest in anything. And then if they're increasing, look at those times where we had those financial crashes, like the recessions and stuff like that. See if those dividends remain strong during those times. Because it will help you predict as far as if there's another situation like that occurs, then at least you have a consistent dividend if you was to lose your job. That's deep.
It is.
That's deep. Because if you lose your job and you still, I'm good, I get my unemployment and dividend payments. I mean, that'd be a good look. Because a lot of people would need that.
Yeah, and to expound on what he's saying, the one thing that we talked about before in previous videos was diversification in your particular portfolio. And he was getting on me about that because of the way that I trade. But at the beginning, I had Bank of America, I had GE at the time that was paying dividend pay, man, and I invested in one of these corporations he was talking about that came out with an IPO with CPPL. It kind of went into, I sold that before. Thank you, I sold that before it actually went into, but that's one way to diversify your portfolio, man. Get a stock, continue to buy into it, and get that dividend pay, reinvest it in the company itself, like he said, or just take the cash and invest and save it. So there's a lot of things that you can actually do, because he and I at this point in time are retail investors. We do a lot of research ourselves, and we put our own money, our own income into actually investing. So that's one way to boost our income at this point in time.
Yeah, dividends stuff like they have like growth. Like I think a big trend from the recession to now was those growth companies that paid out dividends. So those growth stocks that give the dividends. So you got that price appreciation every year with those growth companies, and then they also paid out dividends at the same time. I mean, that's basically a 2-for-1.
Yes.
That's a 2-for-1. So you want to look at companies like that. So we mentioned UPS. We mentioned Coca-Cola. Who also paid dividends? Nike paid dividends.
There's so many.
There's so many companies. But at the end of the day, when you want to know which company pays the dividends, find out which companies, but make sure there's a growth trajectory where the stock will increase at the same rate that the dividend payment as well. So, just a quick video. We just want to give you something for this week. Next week, we'll be doing a lot of homework on a particular sector that we're going to be focused on more on this channel, which is clean tech. Clean tech, that is going to be big business. Ironically enough, the whole oil situation this past week incentivized us. Well, we was on the right track understanding clean tech. So we're going to bring some innovative type of industries to you guys so you can be on the forefronts of it instead of on the back end of it, because at the end of the day, really, if you're on the forefront, that's where you make all your money.
Yes, sir.
We were trying to be forward thinking, innovative, and so appreciate for watching.
Yes, sir.
Like, comment, subscribe, share. I always forget to say that. So again, like, comment, subscribe, and share. And we out. Peace.
When I come around, got the whole thing wobbin'.